All right. Okay. Let's start.
Change the checking live stream, please.
All right. So, good morning, everyone. My session for today is narrative and numbers. First off, my name is Vincent Gentapanan, and I'm with the CTS Global Research Team. And I will be picking up from where Charles has left off yesterday, focusing probably more on the qualitative side of things, as I'm sure um, yeah, yesterday's session was quite jam-packed with numbers and ratios and all of that. Accounting, pretty much, but that's the other side of that's the other side of it, right? That's the numbers part. And today, maybe I'm going to share how the narratives come in and how they fit all together. Then for tomorrow's session, with the fundamental deep dive, it will be a lot more of how we actually do it in application. So today I'll be covering more of the uh, theories and core foundational concepts that you will need moving forward to essentially do the fundamental analysis that we do here in CTS. As you know, I think Charles covered on this yesterday. Uh, just as a recap, through three levels of fundamental analysis, right? So that was understanding reality, which is basically the numbers part of it. So the value, intrinsic value of the business, the cash flows, what is the business model, um, what earnings are like, what it's going to do moving forward, and the next step is measuring perception. So how does the public view the stock? Is it a good company? Is it a bad company? Or is it exciting? Does it have a sexy story? Uh, does it compel you to be excited about it? How are comparable companies being priced? And I think what's key here, right, is the question to ask is what is being priced in today in the share price? Then the third part is setting expectation. Setting expectation. So it's taking this understanding of reality and a measurement of perception, which is a combination of both your narratives and numbers, uh, and basically bringing them together uh, to see whether or not there is a gap and is there a potential catalyst to move the stock in the near term, or how will the stock behave based off what the business model of the stock is like, or how the public's view on the stock is, right? Or what story is being spun out there. Um, so to add nuance, another layer of nuance to what was already discussed yesterday. Yesterday was a lot more on value, right? But I would like to introduce the concept of value versus price. So value, as a review, is what an asset is intrinsically worth, right? While on the other hand, price is what the market is willing to pay for it. What an asset is intrinsically worth is basically its intrinsic cash flows. the earnings of the stock, right? Well, what the market is willing to pay for it is primarily driven by supply and demand. If there's whatsoever reason individual or a participant would want to pay more or pay less for a stock, that would be driven by supply and demand. So on the value side, it's more rational. It's very you, you can compute things. It's very straightforward in theory. While on the pricing end, there's a behavioral element to it, right? So that's part of behavior that drives supply and demand. Although there's still a good reason, right? While or a good rational reason why someone would be willing to pay for it. Uh, there could be some behavioral reason why someone would want to pay more or someone would want to pay less for anything at all, something, in this case, like a company. While on the value side, you can compute what something is actually worth, right? And that's your textbook fundamental analysis. But uh, on the pricing side, it's a mix of fundamentals, technicals, and sentiment. So uh, that's what that's this isn't something that this value versus price was a concept that was uh, made well known and taught by Aswata Madhuran, which is one of the valuation professors at NYU Stern, and he's one of the great minds in the fundamental analysis world. So this whole value versus price concept isn't new, right? There's tools that can be used to determine intrinsic value, right? Your DC, your fundamental traditional fundamental analysis, essentially. Well, on the pricing end, you have uh, sentiment, you have narratives, right? You have behavior of the market, moods and momentum, uh, comparables to different companies. So that's why here at in ideally, right, you would want price and earnings or value to to be correlated, like as value or your earnings go up. In a perfect world, you'd want your price to also move alongside it, right? But in reality, in the real world, uh, prices usually move all over the place and they're subject to greater swings because of the behavioral factors that go into it, right? The drivers of supply and demand, the perception essentially of what the market has with that certain stock. Well, the value of a company doesn't really change much, right? Overnight, unless there's some huge announcement or a significant change in the business, or let's say an unexpected black swan event that could significantly and materially impact your future cash flows, right? But in reality, it it doesn't really change much. It's quite linear. So uh, essentially, what we're playing here at CTS is that we're in the pricing game, right? So um, other other let's say fundamental practitioners might have different goals and different objectives, but which maybe sways their preference more towards valuing and your hardcore absolute fundamental analysis, right? But here at CTS, primarily we're a trading house, and our time horizon when it comes to participating in companies are more on the short to medium term. So we have to remember again that intrinsic value is the sum of all future cash flows. So that means to be able to realize that intrinsic value, if you're playing the valuing game, you're going to have to hold or buy a company for the long term to essentially obtain that, right? While in the pricing game, we're trying to find and understand the mispricing between uh, the intrinsic value and essentially what the market is willing to pay for it, which is the price, right? And whether or not there's a gap there. Uh, of course, this uh, since it's quite it becomes quite objective, right? Since it's no longer absolute, like your textbook fundamentals. We use additional tools to aid us, right? Which is our technical analysis and sentiment to help us form our expectations on whether or not the mispricing is there, and if we're going to have to take advantage, and if it's possible or not to take advantage of that mispricing, right? So that's essentially that's why the Calum framework and essentially also what is being practiced and what we do at CTS generally is composed of fundamental sentiment and technicals, including risk also, right, to help you to protect you from the downside. But that would be further explained to you in once you come across it trading trading sessions. Um, any questions yet so far regarding uh, valuing versus price and what the pricing game is? Uh, so if I go back here to this slide, right? Essentially, in the valuing game, uh, you'd want to be focused on your earnings, right? Which is essentially your driver of intrinsic value, which is your cash flows, right? Which is our reality, but it takes time, right? Uh, it takes time for that to come in and to be able to capture the entire thing. You have to be long term, and that isn't efficient as much anymore for us because we're more on the short term to medium term trading. So what we're trying to do in the pricing game, which is more understanding the perception of the market, is to find gaps, right, between the perception and the reality. So essentially, we'd want these gaps to close, and the larger the gaps, that's where we have opportunities to make money, right? As these gaps between perception and reality, they could potentially close or they could also potentially widen, right? They could go either way depending on uh, the factors that drive supply and demand, which essentially drive price, right? Price could price, which is driven by perception, could overshoot to the upside. It could overshoot to the downside. But in the pricing game, what we're essentially trying to capture is, yeah, the reversion to reality, the reversion to uh, value, and whether that and the closing of the gap between price and value, right? So that's where the money is made for us. Questions? All right. So just to review again the company life cycle, right? So what does this mean to us in the pricing game, and in terms of where we want to find areas of opportunity, right? As you recall, um, the earlier stage companies, your narrative has more weight, while as they continue to grow uh, and start making money, the numbers have to confirm what the story was, right? At its early days, for it to continue executing. While as a company matures, it goes from a growth to value, and that's where numbers have more weight. So uh, exactly, uh, in terms of narratives, they have the tendency to be more subjective than numbers, right? Because numbers don't lie, unless they're lying to you about the numbers, of course. But the numbers are absolute, and because of that, uh, usually the level of uncertainty when you go to the right, when you move towards the right side of the company life cycle, the level of uncertainty isn't as high anymore because the numbers hold a lot more weight. The business is easy to figure out, and with that, the potential for mispricing also isn't as present anymore as, let's say, an early stage company or a small company that still uh, has a novel idea, or is in new technology, let's say. The level of uncertainty when it comes to the potential outcomes, right? Whether or not they will succeed, how fast it can grow, uh, that opens up a higher range of outcomes, and that's where the potent that's where we find a much higher potential for mispricing, right? Uh, so that is also why we have a preference for growth. Growth and uncertainty creates opportunities for excess returns. When a stock is growing quickly, it's very hard to make projections and forecasts accurately, especially if they're very driven still by narratives, um, and that increases the level of uncertainty that is there. And with that uncertainty, the the gap between uh, what the company is actually worth and what the market is willing to price it at uh, could be significantly higher, right? And whether or not that gap would close also depends on it's another layer of uncertainty, right? Uh, which which gives you opportunity also to make money as price continues to move uh, towards expectations and the perception of the market based on the supply and demand. So that's why we prioritize high growth stocks because of the level of uncertainty, which gives more opportunities for mispricings, which in turn drives excess returns, right? Because if let's say a company is predictable and everybody already knows about it, and let's say they can make a more or less accurate projection on how much that company would be making in the next 5 years and how much it's going to be worth, right? We must remember again that the markets are forward looking in nature. So they're already trying to price this in as well. But the value, the gap between value and price wouldn't be as basically, yeah, there's nowhere for the price to go. It's already there at reality, right? What you want is when there's a disconnect or a gap between reality and what the market perceives, and basically the closing or the widening of these gaps are opportunities to make money. But uh, again, it's an opportunity to make money, but it can also be a way to lose a lot of money, right? With uncertainty, you don't know whether or not it's actually going to succeed, right? What if the market is paying way too much for it, right? What if when in reality, let's say execution has a hiccup, or they lose a crucial partner, or they aren't able to deliver on their promises on time, that could change the perception of the company overnight, and that could also cause uh, prices to move uh, against your favor, right? So uncertainty is also a double-edged sword. Once again, it's all about probabilities here. So what we're trying to do in fundamental analysis and FTSR in general is to uh, stack the probabilities to a point where the odds are profitable enough and worthwhile enough uh, in terms of returns to justify all the work that you're putting in, and basically all the work and time that you're putting in. Right. That's why uh, we have FTSR, because that helps us mm, set expectations, and especially with the R in FTSR, helps us limit downside risk, which allows us um, to develop replicable trading systems, right? Um, so that's why we have a preference for growth in the pricing game. Any questions so far? Kobe?
Hi. So I guess a bit of a question. It was just something that like I thought about while uh, listening. And when we say that the market is of course forward looking, uh, I wanted to ask if like events such as like asset write-offs are also like sort of expected? Like, can we somehow expect some companies to write down assets? Like, for instance, if like for example, oil companies, right? Recently,
Right.
they've been having a lot of write-offs, and to some extent, can we as analysts or perhaps the rest of the market, can we sort of predict that they will have a write-off? Uh, since of I mean that's of course a mispricing on, but it's like a mispricing on the value and rather
Mm-hmm.
than like on the pricing side, perhaps.
Right. Um. So I I guess your question is whether or not on the value side does is the market also forward looking on the value side? Um, and I would say yes to a certain extent, but then it would also depend, right? So with the example you brought up, which is oil, it's a mature industry. It's probably extremely well covered, right? So I'm assuming your value practitioners there are should more or less already integrate that into their models, right, moving forward. So, but then again, the market consists of a wide range of practitioners, right? Whether or not that would be pure value, hybrid pricing, behavioral momentum, whatever it may be, right? So all of those participants are trying to look into the future and trying to price in what should somewhat already be expected. But sometimes there are things that would surprise, right? But generally, the simple answer is yes. Um, the, the market can be forward looking with even items on the more value end, right? I'm not sure if that answered your question or do you have a follow up?
That answered the question. Thank you, thank you.
All right. All right. Anyone else? All right. So let's move forward. So, um, talking about our preference for growth. So, where do we start looking for growth rates? Um, Generally, what we do is we try to do a top-down analysis. So we try to identify industries that are growing rapidly. And this isn't really also a new concept, right? They've been doing this since the early 1900s, right? Or during Jesse Livermore's time. I'm not sure if you guys are familiar with who Jesse Livermore is. I think I'm sure some of the more, let's say, those who are already involved in trading and have experience, you probably read some of his books, right? But here in this quote, he says the most intelligent way to get one's mind attuned to the market conditions and to be successful is to make a deep study of industry groups and to distinguish good groups from the bad and basically participate in those that are promising, right? So uh, majority of megatrends are part of industry group moves. So what does this mean? Um, so basically, to help you find or basically see what industry is moving, uh, we can take advantage of one of the tools that we use to interpret narrative, right? Which is the megatrend. Uh, what is a megatrend? By definition, megatrend is a global sustained and macroeconomic forces of development that impacts businesses, economy, society, cultures, and personal lives, thereby defining our future world and increasing pace of change. So these are trends that are sustained, and generally they start off macro, right? But basically, there's things that change the way we live, right? So examples could be even today, mm, like distance learning, right? With COVID, that was brought about and accelerated, right? I'm sure e-commerce is a very common one that comes to mind when one thinks of megatrends. Uh, you're buying stuff off of Shopee and Lazada every month, right? They have sales. Even in the US, you have like Amazon, right? So these are things that define the way we live and also continue to shape the future that we are. But a key point here is that they have to be sustainable, right? Um, and how are these megatrends brought about? So they are brought about by new developments in technology. So basically, it could either be production innovation or uh, disruptive innovation, right? In demographics, so lifestyles and social trends. So maybe today, a good example of that will be how people are staying more indoors, right? So then you have your virtual meeting places, maybe like kids today, right? All they do is play Roblox and meet their friends on Roblox, right? Well, maybe um, the m- more millennials and boomers would remember playing outside or going around, right? Breathing the fresh air and feeling the heat of the sun, right? But um, uh, so, and it could also be brought about by increased spending in terms of demographics, also uh, per capita spending, right? That's one thing. And you also have social trends like social media, how people interact with others, how they share their experiences, and how people are uh, basically are find satisfaction in uh, seeing the lives of others. Also, age can be a thing. We're an aging the global population is aging. That could mean potential megatrends in, let's say, healthcare, uh, new treatments. Then third, you have government policies. Um, so these are uh, a bit more straightforward. Essentially, it's what governments enact and push to do, right? Uh, so yeah, um, I'll just so how do you know you're in a megatrend and what do you want to see and where do you want to be in a megatrend? So the factors to consider is that you want it to have a long runway of adoption or demand. So um, basically it has to be relatively new or just underpenetrated, where the market penetration rates are still really low. That's usually where your new ideas and companies are still emerging, right? In technology, that's when you have technological breakthroughs, and they're still starting to raise money to, let's say, try to bring it to market, right? And if it's really disruptive and could disrupt existing industries and even grow and morph into multiple industries, you'd want that, right? You'd want a mega trend with a huge addressable market. So you'd want a large total addressable market that for that demand to come in uh, eventually as uh, your adoption takes off, right? Uh, which essentially are drivers of growth. Um, and as adoption continues to take off, you'd want to see that inflection point. So um, an inflection point essentially is where you have a where you have a huge shift in direction from from where it linearly is. So when something goes starts going parabolic, right, or you have acceleration, right, in in growth, in terms of adoption, market penetration. This is usually brought about by cost reduction and technological advances as uh, it becomes more accessible to um, larger groups of people, or the technology is just so life changing that people just continue to adopt it, right? It could also be driven by increased consumption per capita, right? If people start to spend more for certain technological advancements, right? People start spending more on internet, or let's say people start spending more on e-commerce platforms, right? And instead of going out and shopping traditionally, right? Uh, and that could cause an inflection in terms of adoption, or uh, even, let's say, ordering groceries, right? Uh, with our lockdown here, uh, that has become it's part of a global mega trend, right? Of e-commerce, and even digital wallets and e-payments have been part of it, right? So, um, and of course, you have government subsidies. So, uh, here in the Philippines, I'm not familiar with too many examples, uh, but yeah, I have some examples to show in in the coming slides. So with all of this, with a long runway of adoption and an inflection point, the key thing really to mega trends and factors that you want to consider in mega trends is that you want to see high revenue growth rates, whether it's current revenue growth rates or future projections, right? Because companies earlier in the life cycle, right, where it still hasn't been able to execute as much, and where it's heavily narrative driven, uh, could could be in a mega trend, but the revenues could still be coming in from the future, or let's say companies that are already in mega trends and executing. and the revenues are coming in regardless of where they are. The key factor in a mega trend is that mega trends drive high revenue growth rates because they're macro sustainable change that uh, basically disrupts. They're disruptive, and they also change the way things are essentially today and the future, right? Uh, so mega trends, the themes are everywhere, right? Everywhere you look around you, you can spot mega trends. You just have to be um, imaginative, I guess, and also open your mind to what is going on in the world. So, in terms of technological development, I'm here. I borrowed this diagram from ARK Invest. I'm not sure if all of you are familiar with who ARK is or what they are. So they're an investment management services company that focuses on investing in innovation, right? So they have uh, all of these ideas and themes that they cover, and they've been doing quite well. And also, they have really good reports on the current happenings and also the current changes and innovation platforms that are going on currently today, right? So uh, we live in an exciting time. The rate of innovation and adoption of thereof um, is accelerating extremely rapidly, right? Like it took the telephone, like let's say, I think almost 50 years to be adopted across, while the internet only took 10, and now you have e-commerce and social media, like it taking even lesser time, right? And even more controversial things like blockchain technology and how they're also disrupting a huge um, a huge area of how things are today, right? Um, so yeah, it's exciting. You just have to try to open up to new ideas and try to look into them, right? The innovation platforms that ARC highlights is energy storage, artificial intelligence, robotics, genome sequencing, and blockchain technology, right? So that is what they believe is going to be the it's going to drive innovation, uh, and it's going to be extremely transformative compared to in the past, and how its impact is on history, right? Um, with energy storage, you have battery technology, hydrogen, you have EVs, right, that come out of these battery technologies. You have renewable energy sources. Um, with artificial intelligence, um, you have apps like TikTok doing much better than its peers since it uses an artificial intelligence algorithm to help recommend its users on what the user wants to see, right? It's also driving deep learning and also automation in uh, eh, even everyday repetitive tasks that can be automated. Um, your your call center, your customer contact centers um, are already being starting to be replaced by chatbots. Um, they're uh, even under drug discovery, it's being used there to help find new chemistries and new drug formulas and rapid testing and reiterations to help advance further innovation, right? So these megatrends are huge, and they can have multiple underlying megatrends within them, right? For example, with robotics, you have manufacturing, right? Automation uh, in manufacturing, 3D printing also falls under robotics, right? You're no longer having humans do their job. You have also unmanned drones, right? Now being used for surveillance instead of like helicopters, uh, and even potentially for deliveries, right, in the future. Um, and under genome sequencing, with the costs of sequencing a genome coming down, there are breakthroughs in treatments, diagnostics, a bunch of exciting stuff going there, and blockchain technology, of course. The clearest impact today is probably fintech, but then the questions are uh, being raised. What if everything eventually will become money-like in substance? So that's also where the huge uncertainty comes. That's also where the huge potential for growth comes. It's all these stories, right? Uh, uh, it makes people imagine what the potential could be, right? It could be underappreciated, uh, uh, or it could also be way overblown and prone to hype, right? So these are all uh, these megatrends are narrative tools that help us uh, determine where we want to look and what the market perceives in terms of certain companies and their prospects, right? And what potential is there to continue to drive growth. Uh, I if you haven't seen this, if you haven't seen this report yet, I'd highly recommend for all of you to check it out. You can just Google ARK Invest Big Ideas 2021. So it's quite it's quite concise, but it also holds a lot of important data and information that can give you an idea of what technological uh, development megatrends look like, and also where their total addressable market lies, what level of penetration is being seen today, and what perception, sorry, what level of growth runway is being seen, total addressable markets for all of these mega trends and technological disruptions could be, right? And essentially, it's difficult, especially in technology, to make forecasts because the range of outcomes are so high due to the fact that everything happens so quickly, and there's a tendency for the market usually to underestimate these things, right? Uh, or maybe in the near term, right? Overestimate these things, causing short-term uh, divergences from reality, right? Which also being able to spot those, being able to understand the narratives, being able to understand what the narratives are telling you, being able to understand uh, what the numbers uh, actually are, right? And what do you think the numbers will be based off the narrative, or what everyone else, what the rest of the market believes what it will be, right? Will help you determine uh, mispricing, if any, and you it would be an opportunity to take advantage of. Yeah, so just like I've already uh, talked about earlier, like deep learning, the reinvention of the data center. So that's your NVIDIA acquiring ARM, right? So we're gonna see a lot more ARM-based infrastructure from traditionally uh, which is a type of chip, right? Which has traditionally been dominated by x86. So x86 is a architecture basically for your computer chips and data centers has been uh, that has been basically mainstreamed by Intel the since they've had the uh, market leadership for so many years. But then um, now you have increased workloads, right? Where people are using GPUs to even assist them with repetitive workloads, right? Blockchain technology, also more efficient chip design with AMD's chiplets, and also faster shrinkage of the nodes, and the continued acceleration of the continued the continued Moore's law, right? Virtual worlds. The idea here is that it's going to be a place where it's going to be a place away from home, at home. It's already somewhat happening. Usually, it's seen in the more younger demographic, right? Uh, with Roblox and metaverses, but eventually, even Zoom meetings would have virtual meeting rooms. You can have virtual meets. So that's one thing that's happening. You can, and especially with technology uh, d- advancing to the point where photorealism is so real. Um, there's a narrative out there even that eventually being in a virtual world would be in virtual reality, let's say, would be indistinguishable from the actual real world, right? And the potentials for that are quite vast, right? But then again, that's the narrative side of things, right? Uh, EVs, automation, 3D printing, all of these things are examples of the technological developments that drives mega trends and has the potential to uh, be sustainable and change the future and the way we live, right? Uh, we might go to space one day, so that's nice, right? That's another area to be looking at. There could be opportunities there in the stock market. So Uh, okay, so an example of a government policy-based megatrend that has been we've experienced as a team is recently in 2020 there has been a global push for renewable energy. So there was strong support from China and the EU. China announced that they targeted 25% electric vehicle penetration by 2025. Uh, and EU also approved its green climate change plan. Then, excuse me. Then towards the end of the year, you have you have um, you have Biden coming out with his infrastructure plans as he was being voted into office to focus on green energy and decarbonization, right? So what happened here, right? So the beneficiaries that we're seeing here were electric vehicles, solar, fuel cell, hydrogen fuel cell, and renewable energy overall, right? So uh, yeah, so you have your solar ETF, which is TAN, and your global clean energy ETF, which is ICLN, moved significantly, right? Going into March 2020, after the COVID, the initial COVID crash, right? All of these names started rallying because there was a concerted effort globally to push towards renewable energy, right? So narratives like these, right? People start imagining what how things could be, right? Although the value of these companies today or even tomorrow, right? People are already trying to figure that out, and the mere potential of it uh, causes already these names to move significantly, right? And with EVs, right? 2019 to 2021, um, uh, in the recent COVID-19 pandemic, interestingly, uh, EV sales continue to increase globally, right? While traditional gas-powered car sales um, decreased. And this was also evidenced by a lot of your traditional automakers having to cut costs uh, and and close certain plants in certain countries, right? Or halt production. But well, even with all of this happening, uh, EVs itself, the push towards um, more sustainable and renewable energy. Also, the uh, the uh, the general public's view on climate change and the potential impact it could have on society, right? Also pushes this narrative. While at the same time, you have governments subsidizing for this, right? China, U.S. They want to electrify vehicles, so you have vehicle sales growing year over year during the COVID pandemic, while the gas-powered vehicles decreased. Uh, and these are the charts. So here we have Tesla, of course, which is I'm sure you guys are familiar with Tesla, Elon Musk, right? So this chart is a 3-year chart, 2019 to 2021. So you can see uh, with the mega trends that are in play, as the narratives continue to improve, uh, in a way, it also continues to drive top line numbers. And what happens there is that it also continues to drive price, right? Because people are willing to buy it uh, higher because it's a great company, it's a great stock, it has a huge growth runway. It's part of a mega trend. It's underpenetrated, right? So mega trends are significant in the narrative portion, right? And it helps you find industries, let's say like the EVs, right? You've focused on if you're aware of your renewable energy megatrend, um, you would also look at EVs. Potentially, you would have been able to capture it if you looked at it and you saw that the uh, it has a potentially huge market. Governments are supporting it. Um, the penetration rate is still low, and there's still room for it to grow significantly, right? And it could be driven by high growth, right? Which continues to fuel uncertainty, right? It's both uncertainty to the upside, uncertainty to the downside, right? But when markets are good, when people are excited, usually that uncertainty price just rallies like crazy, right? As you can see here at one point, um, Tesla is the black line, right? It went up 1,200% in in 3 years, right? Well, you also have your other Chinese automakers, which is NIO, XPeng, and Li Auto, uh, also rallying with all of this government policy coming out, and also um, essentially the whole climate change, green energy, sustainability paradigm that is starting to take hold today, also with people, right? Uh, and all of these things can result in huge moves like this, and being able to spot these mega trends early, being able to essentially set your expectations with that are grounded in reality, which means you got to have numbers to back it up eventually somehow, right? And as you can see, um, 2021 estimated revenue growth rates for these guys still are expected to continue to be really strong, right? Uh, and you also have other metrics like total you total cars sold are also continuing to grow really strong. Um, that's why the market is willing to pay these kinds of ridiculous prices for them, um, because of the narrative essentially. And if the numbers make sense somehow, justified by the narrative, then the market is willing to pay for it, right? That's your behavioral aspect of it. And you can use the charts to help you spot these behaviors of people who of disparities in supply and demand, right? Which could help you in terms of execution, uh, buying and selling a stock, right? Uh, and also with sentiment really good. 2020, the post-COVID rally of 2020 was a ridiculously strong bull market, right? Also, so that contributed to all of these names rallying like crazy, right? So it's a combination of narratives and numbers again. That's what we're doing in the pricing game. So the half the first tool that we're employing in terms on of the narrative side, which is are these mega trends, right? So I hope you can get a picture of why megatrends are important, how they can drive growth, right? Uh, so just to share further what our favorites are today. So these are um, the favorites of our team at CTS Global, our research team today. These are our favorite names, right? That we really like. Um, uh, in terms of fundamentals and in terms of potential mispricing. Uh, we still think that these names could um, still be significantly mispriced enough for it to be worth it to take some form of risk. It's not financial advice, but just sharing some of the mega trends that we really like and that we're actively participating in when the market gives us an opportunity to, right? So you have Affirm, which is a fintech uh, in the fintech megatrend. So what they do is they do buy now, pay later. So this is disrupting your traditional credit card industry. So basically, you can go to, let's say, farfetch.com and look for a luxury bag or like um, a really nice pair of sneakers, and instead of paying it straight up, you can just use Affirm, and you can choose to pay in installments without any late fees, right? And this doesn't require you to have a credit score. Uh, doesn't require you to apply with a bank and send in requirements for a credit card account, for a credit card or a credit line, right? And also, there are no hidden fees, allegedly. That's one of the main one of the main thing one of the main things that a firm is uh, trying to say is their um, competitive advantage, which we will discuss next. AQB, which is under the genomics megatrend, so they do GMO salmon, so farm raised. GMO salmon takes a lot less feed and it grows a lot much faster, which means the inputs are less detrimental to the environment. It's more efficient, and it also helps save the ocean, right? I don't know if you guys have watched Seaspiracy. Yeah, that was really sad, right? So uh, there's opportunity. We think that there's opportunity for a farm raised, a GMO salmon uh, to do well in the future. Bili is a Chinese Bilibili is a Chinese online entertainment platform. So this under your digital media mega trend, right? You have uh, live streaming, you have short form and long form video content. You have comics, you have games, you have anime, right? So Bilibili is the leader of that in China. So a good comparison to the Western world would be a combination of Twitch, uh, Crunchyroll, and YouTube, right? But they're also branching out now into premium content which they're creating. So it's something similar like Netflix originals, right? So this is one of the leaders in that space in China. Continues to grow like crazy. It has a leadership position, and we continue to like it. CYRX, with the rise of genomics, right, and gene sequencing and all of these new uh, genetic treatments. CYRX is a beneficiary because it has logistics for genetic drugs because these treatments have to be kept at cryogenic temperature, right? So as the space continues to develop, cryoport should be one of the beneficiaries to all of these genomics developments and all these gene therapies and treatments, right? Datadog is a more recent one, but it's still part of the cloud uh, megatrend. If you're not familiar with what the cloud is, it's essentially the internet. Uh, I think is the simplest way of putting it. So they're one of the leaders in monitoring and analytics. So things get complicated real fast once you start migrating things to the cloud and start using cloud integrations across different cloud providers like AWS, Google, and all of that, right? And all of this opportunity is still greenfield. Although since it's a more established leader, it's already doing. Uh, it's one of the leaders in its space. Desktop Metals is a 3D printing company that we like. We think it has uh, tech leadership, uh, and the narrative of or the megatrend of 3D printing itself was already played out in 2013, right? Then it died down, but now it seems to be that our adoption is expected to hit an inflection point where 3D printing will not only be used for prototyping, but also be used for end use parts. So their systems has reached a certain level of uh, a, a certain level where it makes economic sense to spend uh, on the 3D printer to manufacture your parts rather than using traditional methods, right? So it's faster and cheaper, and it's still quite early, still uncertain, but it's a mega trend to also look at, right? You also have DDD uh, and X1 in that space if you guys are interested in those other ones. Our solar favorite, Enphase. So yeah, it's already played out, right? The solar, the solar narrative. It's already there, but it's still going to continue. Because remember, these mega trends have to be all these mega trends are sustainable, right? For them to be mega trends, they have to be sustainable. They have to change the way we live life, right? Uh, Laser is under autonomous vehicle, so they have they're claiming to have the most advanced lidar sensors, which is uh, essentially part of your self-driving modules in all of these electric vehicles, right? So you all these talk of like self-driving cars, robo taxis, right? Or even like uh, yeah, like autonomous logistics trucks, right? Um, Things that will take you from point A to point B without a driver. These sensors are part of it, and they have partners, um, which is pretty good. Neo, we already covered that, right? It's a Chinese EV company. Natera is a oncology company. They do cancer testing. Sorry, they do uh, monitoring and also are trying to do early detection for cancer, right? And it's leveraging gene sequencing to be able to make this happen. PacB or Pacific Bio made innovations in long read sequencing. So this is also huge for the genomic space. It's doing well also, and we still believe that the runway relative to its peers is quite high. PI, a long time one already. It's a bit more mature, but we still think that uh, omni-channel solutions, which inventory systems with RFID chips, still have a long way to be adopted. Plug, which is a renewable hydrogen energy company that we really like, um, huge runway potentially, um, but we'll see how they execute into their plans. And QFin recently is a Chinese fintech consumer finance company. So they do loans, and they've recently been uh, they've recently benefited from certain regulatory changes from the Chinese government, right, which helps them grow and continue to be profitable. Um, why do megatrends matter? To close off on megatrends, so just to pull it together, um, I think I've mentioned this in part um, earlier, but exponential growth is really difficult to forecast, right? How would you imagine, or how could you imagine a company to grow, let's say, like um, 20% year over, or even 30% year over year for 5 to 10 years, right? And that is gonna cause a huge um, earnings and cash flows, right, over the long run. But it's difficult to forecast exponential growth. Uh, and this is usually what happens in megatrends. Uh, Megatrends, by definition, are drivers of growth, right? And since exponential growth is difficult to forecast, uh, due to the fact that the range of outcomes that you can have are quite wide, right? And yeah, like how do you really know? Markets tend to underappreciate or misunderstand these stories early on, right? So that gives us opportunity. Let's say if you're able to understand the story or understand even the mega trend and the technology and the companies benefiting from it, uh, or you or you're able to appreciate and take into consideration the total potential that the megatrend has. Uh, it could be a huge opportunity to take advantage of potential mispricing that could exist there, right? Um, and also, I think Charles discussed this yesterday when he was talking about a financial analysis regarding operating leverage, right? I hope all of you are already familiar with what that is, but essentially, operating leverage magnifies the earnings growth potential of a mega trend, right? So, uh, as a company continues to grow exponentially, um, its gross margins, uh, if a company has relatively high margins, right, gross margins, essentially, as it continues to grow, um, earnings should kick in, right? Because of operating leverage, as top line continues to balloon, while your cost of uh, another dollar is basically, yeah, you have really high gross margins. Um, it magnifies significantly the earnings growth um, potential of that a mega trend has on a company. So that's why mega trends are important, and this is the more or less the first half of the narrative part of what narrative and numbers are. Questions? Marco.
So in dealing with megatrends, what do you prefer more? The newer entrants or the incumbents who already have the scale, but they're still trying to shift to the megatrend? So who
It,
do you think? Oh, sorry, go ahead.
I'm sorry, the newer entrants or
Or the incumbents who are already shifting to the mega trend, but they already have the scale. So I guess like one example is for EVs, like the people like Tesla who are really based on the mega trend, or the incumbents who already have the scale, like General Motors, who are already shifting towards the EV trend.
okay, that's a very good question. So who do you prefer, right? The incumbents, like let's say Ford just came out with a new F-150 Lightning truck, right? Compared to Tesla, uh, that's already within the already experiencing adoption and already within the inflection, right? Um, that would depend on also whether or not the whether each company it would also depend on their competitive advantage, right? So that's the second half of it. That's what we're going to be discussing next. So just to uh, put just to answer your question, it depends because the incumbents could also stay entrenched and continue to grow at rapid paces as operating leverage kicks in. And if they have competitive advantage, it can continue to drive earnings, right? Which could potentially um, create mispricings. But also with, let's say, new entrants from existing older megatrends, right? Those are the slow adopters, right? So it's in theory they're gonna have a harder time because once a company is in a mega trend, and especially if it has a competitive advantage, it's harder for other companies to unseat that, right? But you have to, it's case to case again, right? You have to take into consideration whether or not there's a moat to these companies. What is the competitive advantage, and whether or not competitors can eat into that and compete effectively, right? With let's say Tesla versus your uh, Ford and GM and Toyota coming out with their EVs, right? So it really depends. If you are able to establish that, let's say Tesla does indeed have a significant competitive advantage compared to let's say Ford or GM, then we would prefer Tesla. But then again, it's case to case, right? You have to gauge whether or not because Megatrends is just one part of it. The other part of it is the business model and the competitive advantage that that company has. The best companies, okay, the best companies are the ones that have competitive advantage and are in Megatrends, right? That's what you want. Uh, I hope that answers your question.
Yes, thank you so much.
All right. Kobe, you have a question for me?
Yeah. I was just wondering if the current low interest rate environment could also be considered a mega trend, or are these mega trends more of a fiscal and technological thing? Because uh a lot of these sectors are built around cheap capital costs,
Hmm.
but they're not necessarily directly part of the trend, right? They have their own industries and whatever. So I was just wondering if we should interpret the current monetary policy environment as something of a megatrend as well,
Mm.
or just more of a
That,
systemic thing for all stocks in general?
that's a good question. Um, Whether or not it's a mega trend, um, by definition, it isn't. I think I would put it, as you said, it is a systemic thing, but probably it would have more effect on your future cash flows, right? Because your interest rates is going to have an effect on how your future cash flows is going to look like, depending on the structure of your business. So it's going to be more on the, an assumption on the valuing side, right? Because interest rates have more impact on the numbers, right, rather than the narrative end of it. Yeah. So I think I would look at it that way, if that makes sense, right?
That's true. Thank you. Thank you.
All right. Harold, you have a question?
So far we've talked about how the prices are parang hindi siya the same with the value and how the market is very future oriented. So how do we now know if the market has already factored in the future value of a company in the price? So for example, you value the company way higher than the current price. So how do we now know na it's the market who's undervaluing the company and it's not you who's overvaluing it lang?
Okay. Very good question. My answer to that is you'll find out tomorrow. So so yeah, Tim, my colleague Tim will be going a lot more deeper into that. I'm just gonna discuss the concepts today. But yeah, how do you know if the market is wrong and you're right? And how do you know if you're right and the market is wrong? Um, you don't. You just have to do your best to make assumptions, gauge the probabilities between whether or not you're right in the narratives, or whether or not the market is right, or whether or not you're right, depending on your, let's say, valuation after taking into consideration the narratives and numbers. Then see if you believe that you have enough conviction in your call, then you take it, right? But if the conviction level doesn't reach the point where you're able to make the trade, then um, just find another thing to look at, I guess. But you don't really know for sure. It's a spectrum again, and it's all about probabilities, right? And it will come down to the accuracy of your assumptions, both on the narrative side and also on on the on the numbers side. As Charles said yesterday, there is no one size fits all, right? You don't. If I had a formula to tell me that I'm right and the market is wrong, and then and or vice versa, then I would be rich, or everyone wouldn't make money anymore. If it was that easy to know, then you wouldn't have that mispricing, right? That's the whole point of it being ambiguous in the first place, so that there are levels of uncertainty to be able to capture mispricing out of, right? Uh, so yeah, it's you don't know for sure 100%. It's still all about probabilities, right? But tomorrow, I'm sure you're gonna enjoy that.
Thank you.
All right, sure. Okay, so I'm gonna move forward to um, uh, So the second half of perception, right, uh, is the business model of the company essentially. So here we have a quote from Warren Buffett. He says, "A good business is like a strong castle with a deep moat around it. I want sharks in the moat. I want it untouchable." Um, so essentially, um, when assessing business models, we want to determine whether or not the company that you're looking at has a competitive advantage or not, right? Um, so, what is a competitive advantage? So, it's either factors or attributes that enable a company to outperform its rivals. Uh, so, what does this mean? Um, a competitive advantage acts as a barrier to entry. That's why Warren Buffett calls it a moat, right? It, it, it basically stops competitors from trying to enter your business and compete with you. So for a business to have a moat, the business model should not be easily replicated. So basically, uh, it if a company has a moat, then it can't be essentially ripped off and copied, and you have the same two exact companies but different ones, right? So competitive advantage is a moat, and essentially what this does, it helps protect existing market share, or even potentially increase market share, um, because as new entrants aren't able to enter, you just continue penetrating the unpenetrated portion of the market, right? And competitive advantage sustains above average profitability, which means companies with competitive advantage would have better than average margins, right? As either they can command premium pricing, that's one, or they possess low cost advantage. Okay, so the key things here to um, take note of is a barrier to entry and above average profitability. Um, so why moats? Uh, why are moats important, right? Moats allow companies uh, to make moats essentially sustains above average profitability, right? While at the same time uh, acts as a barrier to entry, which helps um, the company continue to make money, right? So excess profits, companies with moats have excess profits, and it gives them the time to strategize and potentially enter into new spaces, further strengthening their moats even further. So they'll just be, this is when we call what we call a company that just becomes so entrenched that they almost cannot be displaced because their moat is so strong and so wide. Uh, and moats also tend to be qualitative in nature, right? That's why they're uh, once again they're the second half to the narrative tool that we use in conjunction with MegaTrends, right? So qualitative insights, they're harder to evaluate, um, whether or not right or wrong, right? And this increases the level of uncertainty. And once again, as uncertainty is increased, the range of outcomes are increased, there are more chances for mispricing, right? For the market to price the um, company far from what it really should be, in theory, which then again gives us the opportunity to put it all together and gives us the opportunity to capitalize off that mispricing to make money. Um, so, what are the sources of competitive advantage or moats? So, sources of competitive advantage are intangible assets. So, you have patents, intellectual property, branding, and licenses, right? So, intangible assets are assets that aren't physical, so they're non physical assets. Patents and intellectual property, uh, and licenses. Um, these things they act as a barrier for competitors, right? So that's one part of what a moat is, right? It's a barrier. So if you have a license, if you have a patent or you have intellectual property uh, that that your competitors can't infringe on, or they would end up breaking the law, right? Then that can be your source of competitive advantage, right? Because it hinders them from entering your market, right? Licenses as well can be a barrier. If you have a license to operate, let's say if you have a license to operate marijuana dispensaries in uh, North America and Canada, while your competitor only has a license to operate in Canada, sorry, in the US and Canada, right? And your competitor only has a license to operate in Canada, then obviously that is another barrier to entry for your competitor as he doesn't have the license. While branding uh, is a pricing power tool, right? So it allows you to charge more, pretty much, which results in higher profitability, right? Um, Higher margins, um, uh, essentially. Second, competitive advantage can come from network effects, right? Essentially, what network effects are is a company's product or services becomes valuable over time as more people use it. Uh, so, what are examples of network effects? So, first, we have two network effects, right? We have direct network effects and indirect network effects. So, the first type of network effect, which is direct network effect, means that if an additional customer uh, uses the product or the service, um, there's value that is added to that product or service. An example for this would one be the telephone, right? Historically, right? If imagine at the start of the adoption of the telephone, you've had a few households using the telephone, so it wouldn't be as valuable to get a telephone to because not as much people are using it, right? But over time, as more people start buying telephones, um, you become compelled to also buy more telephones, right? You also become compelled to buy a telephone because it becomes valuable because now you can call more people, more businesses. A more modern example of this, of course, is Facebook. The more users there are on there, you have more data, um, and your time spent there becomes more valuable if you have friends on there, right? Uh, and that's an example of direct network effect. which also could help drive margins. Uh, the second type of network effect is an indirect network effect. So a good example of this is, let's say, um, Grab, right? So you have uh, two, two. So you have with Grab, with your Grab app. Let's say uh, you grab car, grab food, grab delivery, grab pay, whatever, right? Uh, it's an indirect network effect because it comes full circle. So let's say you have the user and you have the rider, right? So the more users there are on the Grab platform, it incentivizes riders to also ride on the platform, right? Because then they can get more jobs per hour, let's say, compared to um, doing it for Lala Move or Food Panda because of the number of users on the platform, right? And also, in effect, what happens when the number of riders increase on the platform? Um, it also helps drive the number of users on the platform, right? Because what happens is that you get bookings instantly, your services are much faster, and it incentivizes people to use it more. And the Grab app becomes more valuable over time, right? As as more people continue to use it and more riders continue to ride for the app, and as it continues to grow, that way it can help. Uh, it can help also continue to drive margins. Third is cost advantages. So I think this is a common one. With, but there are two main types, which is scale and niche, right? Scale is a little hard to scale is a little hard to replicate or copy, right? Because you need a lot of money and a lot of investment to grow a company to a certain size where you have economies of scale and your margins uh, improve significantly, which cost advantage comes in from it, right? So that's also a barrier, somewhat a barrier to entry, and also a source of excess profitability potentially. While your niche is where it might not be worth it for competitors to enter because it's a small market, and also at the same time you won't be spending as much, right? Because you don't have to grow it to a certain level, and since you're the only niche player there, you can also save on your margins will also reflect costs. Well, the last one is switching costs. Switching costs is when uh, a company becomes so entrenched, sorry, a customer becomes so entrenched with the company's product in where uh, the cost that it will take to change to another company's product, let's say, far outweighs the benefit that it has, right? Good, great example of this is, uh, which is relatively simple, not too complicated, is Microsoft, right? Um, why would you switch when you already are on Windows, right? And to switch Windows to, let's say, Linux or some third party operating system, or let's say even change it to iMacs, right? What's the additional benefit you would get from switching compared to the cost that it would take to switch it, right? So that's why people just continue to use Microsoft Windows because the switching cost is just too high once it's already there, right? So it doesn't make sense. So that gives them also a potential to widen their moat. It's a barrier to entry. Okay. So, w- what are the indications of competitive advantage, right? Uh, so, first is market share. Um, Companies that have competitive advantage usually have a high market share because capture, they're able to maintain a leadership position uh, by capturing a certain portion of the market, a significant portion relative to their peers, and defending it, right, for some reason, which means they're better than their competitors because they're able to capture a large market share. That's a clue that they have a competitive advantage. And then you can look deeper into what the competitive advantage is, right, to help you gauge also on the narrative part. Uh, they have loyal customers. So basically, this ties in with like switching costs and also like customer loyalty. So basically, if a person starts using their product, they don't leave or they continue buying more, right? So you you, you churn rates for companies with competitive advantage are relatively low. Uh, for software companies, this means you have a successful land and expand. What this land and expand means is that you sell your first software, then you continue to sell the rest of your product lineup eventually to that same company, right? Uh, yeah, which shows that you have a competitive advantage compared to its competitors, where you can defend your moat and you can also continue to uh, tap into that market. Then third is pricing power. Um, yeah, so we talked with this about branding, right? Pricing power is the ability to command premium prices without losing business to a competitor. Apple has pricing power. Um, they can charge whatever they want for an iPhone, right? And they an iPhone buyer still probably wouldn't buy a Samsung or a Huawei phone, right? Uh, Companies within the industry that have pricing power, they're not undercutting each other. This is obvious in the uh, luxury goods industry, right? Everyone just charges pretty much premium prices for everything. They're not discounting each other. Yeah. So just to try to bring the narrative and number and what we've discussed today about megatrends, the pricing game, and competitive advantage together. This is how our team looks at it, right? So this has, if you see, it has also similarities to the company life cycle. But since this is actually adopted from the Gartner Technology Adoption Curve, this is gonna be more of your companies in megatrends, which are companies that are growing fast, which will fall under your growth category, right? So uh, I think Lawrence on the first day talked about growth stocks, 45, 60, and 90 degrees, right? But basically, this is one way of another way of looking at mega trends and also trying to bake competitive advantage into it. On the left side, the same with life cycle of a company. Narratives have more weight, right? While towards the right side, numbers have more weight, and in the middle, uh, there's a more balance of narratives and numbers. So uh, they're separated into three main categories of expectations for the stock, or sorry, not expectations, classification. It's a way of classifying them as like spark stocks, commercially viable, and the ones that are in mainstream adoption. So first, let's look at the spark, right? So these are companies with game-changing catalysts that kicks things off, right? So the actual adoption is still very low, and wide-scale commercial viability is still generally still very unproven. Right? So these are your 45. Mostly, this is where your 90-degree companies fall into, right? Your informed speculation companies, they usually fall under this spark, right? So they need catalysts. Adoption isn't there yet, pretty much, and while uh, it's still unclear whether or not they can continue to grow and scale, right? But these stocks, this is where the narratives matter the most, right? So what to look for in these names? They're often prices for these stocks are often news flow driven, and the stories with the narratives on them are like are focused on market size. So like uh, there's a huge potential market for this name if it can do what it does successfully, right? It's a huge cash reserves and strong partnerships are favored, but these names are also a lot more prone to hype. Um, I'll just go through this quickly. Uh, Next is your commercial viability. So here's where you start to see your inflection point in terms of adoption, but competition still remains low. The key points here to look at is stories on industry adoption or what's in focus, right? So this is where you will see stuff coming out on the headlines about industries like um, genomics and renewable energy. So the inflection point is almost starting, right? But in this area, the market will only select companies that are already executing. So what does that mean? Uh, you want to see the drivers of revenue start to come in, right? So you want users, let's say for an app or software company, you want to see user growth to start growing. You want to see that inflection happening there, right? Or for let's say a chain of stores, uh, you want to see that store count growth also start to come in, right? You want to see that execution is there. And at this point in commercial viability, right, the best companies will stay expensive because after all, the market will be willing to pay a premium for a company that the market believes could be worth a lot more in the future, right? So, and these are your companies that could already be commercially viable. Uh, and this is where your 60-degree stocks fall under, right? These are your aggressive growth companies. Uh, yeah. So um, the third the third one is the companies that are classified under mainstream adoption. So these are your uh, established, more mature, but not yet declining companies, right? So they're already established with wide adoption. So they're leaders in their space. But this is where competition also starts to get intense, right? Uh, and since the competition it starts to intensify once adoption already continues to be penetrated, uh, what's in focus here is the competitive advantage of the companies. This is where bottom line numbers. So like yeah, earnings and net margins, profitability becomes important here, right? Because it then reflects the competitive advantage here. It's also towards the right side. Uh, Numbers start taking more priority. Since numbers are more grounded in reality, there's less room for hype, right? So can't really hype numbers because they're there already, right? Unlike narratives where you can spin tales and basically use your wildest imaginations and dreams to come up with stories to justify why a certain company should be trading at a certain price, right? With more mainstream adoption companies, that's not the case compared to, let's say, your Spark, right? Um, and price action here is dependent on the overall market sentiment. So these companies generally will move with the market, although they can be alpha in certain areas. But when sentiment isn't there, usually these companies also um, are generally in line with what the market sentiment is, right, in terms of price action, because um, that's assuming that there's lesser uncertainty because the numbers are there, right? But yeah, there could still be room for mispricing, just not as much as your Spark and your commercial viability names. Um, so just to tie it together, the qualities of best companies. What are the qualities of the best companies? I think I mentioned this earlier for as an answer to question, right? But many of the best stocks are market leaders in a mega trend. What megatrends do for us, it provides us with a bigger picture, right? By knowing megatrends, you're already halfway there, right? Now you already know what industry to look at, and then it helps you do comparisons between competitive advantage and peers, and then you can apply your financial metrics, right? Then that's where relative valuation and re-rating and derating is gonna come in, depending on uh, whether or not there's mispricing relative to its peers or whatever, right? So megatrends help us with that. Companies with strong or widening moats are in the best spots to take advantage of megatrends, right? Obviously, since megatrends is sustained and they drive growth, as long as your company is also sustainable, which assuming it has a moat, it should be because it's a barrier to entry. They're the companies with the moats are the best ones to take advantage of that sustainability and huge growth potential, right? Um, so by knowing where we are in the company's life cycle, we are able to look for relevant fundamental variables that drive market perception. Um, so yeah, that's just a starter for what you guys are going to start going deeper into tomorrow with process, actual application, and examples of what we've been able to discuss today and yesterday, right? So I hope you guys are excited for the fundamental deep dive. Just it's already we're 5 minutes over time, but if you guys have any last questions, um, I guess the floor is open. Um, Questions, anyone?
Okay. If that's no more questions from everyone, we can wrap it up there. So again, thank you very much, Nell, for that comprehensive talk, and thank you to everyone for attending today's live session. As always, feel free to leave your questions on the Facebook group or shoot us a message anytime if you didn't get the chance to. So just a reminder that tomorrow we have our very first special Friday event at 10 a.m., which is a day in the life of a CTS trader, where you will get the opportunity to ask our panel of traders any question regarding their personal experiences as a trader, as well as what it's like to live the life of a trader. So if you want your questions to be prioritized, please leave it on the Facebook group comments so that we can note this down in advance also. The panel will be answering these questions before the live ones. So yeah, just go there if you want. And following this session, this will be our afternoon session at 2 p.m., which will be led by another member from Team Research who will be exploring on how to deep dive on fundamental analysis. I hope you're all excited for tomorrow, and we look forward to seeing you guys there. Enjoy your lunch.
Thank you, guys.
Thank you, guys.
Thank you, Mel.
All right, thanks.